you guys? It's Joseph with What Joe Knows, where we discuss finance, real estate, and all things that are positive and inspirational. Today I'm going to go a bit more in depth about a financial concept called liquidity. Now I do have another video on the channel called the 5 Financial Concepts, where I briefly touched on some great information, and I really recommend that you check out that video. So now I am making individual videos that dig a bit deeper into each one of those 5 concepts, and today's topic is liquidity. But before we jump into the video, please subscribe to the channel and hit the notification bell below. Alright, so you may be wondering, what is liquidity? Why is it important? What the hell is it? Well, simply, liquidity is a measure of how easily an asset can be exchanged. It means how quickly you can get money out of it. How can you access the money out of that asset? And your investments are said to have stronger liquidity when you are able to convert them into cash. So cash would be obviously the most liquid form. But another example other than cash will be stocks. Now both of these are great liquid forms because they can be easily bought and sold fairly quickly. Now one of my favorite types of investments or assets, as I've said before, is real estate. However, in terms of liquidity, real estate is less liquid than other forms, because in times of an economic crisis or a down housing market, you may not be able to sell or refinance a property right away to access that cash. So a liquid asset is an asset that can be turned into cash, and there are 2 measures of liquidity. One is called the current ratio, the other is called the quick ratio. So the current ratio is your current assets divided by your current liabilities, while the quick ratio equals your current assets minus your inventory divided by your current liabilities. And basically a high number for both of these results in high liquidity, which means that you're in great financial health and that you have an easier time getting money in and out of the market. However, I must caution you, the biggest risk you take by having too much invested in liquid assets, such as like a stock portfolio, is that if it drops significantly in a short period of time, you're kind of screwed. So if your entire net worth was in stocks and the stock market dropped 20% over the course of a year, well, now you've just lost 20% of your entire net worth. So stocks are typically a long-term investment, long-term play. But what's important is to diversify. Diversification is very important. Now, in terms of liquidity, what I recommend and what I do for myself is to have at least 6 months or more of your living expenses in a high-yield savings account with the companies such as Wealthfront or American Express, both great companies, because your money will earn a superior level of return than like with a traditional savings account. However, it's still accessible, so if anything were to happen, liquidity offers you great peace of mind against possible unforeseen circumstances, because life does happen. But too much liquidity could be bad because it means that your money's not working for you and actually can go down in value due to inflation. Now, if you'd like to know more information about inflation, I do have a separate video that does go into more detail about inflation. So again, you guys, for myself, I do have an emergency fund and a high interest savings account and a traditional savings account. And I also have the vast majority or the vast amount of my money invested into real estate, stocks, and other retirement accounts. Because I want my money working for me. I want my money earning money. So, for example, one of my investments averaged a 23% return in 2019. I do realize this may not happen every year, but let's say that it averages 8 to 15% over the next 20 to 30 years. This allows you to build and grow your wealth exponentially. It's very powerful with time and compound interest. I really hope you found the video informative. If you did, please give it a thumbs up, as it really does help to support and grow the channel. And as always, feel free to leave any comments or feedback. And again, I, Joe, also want to know what you know. Thank you and have a great day.